Good morning, students. You are here because you are trying to understand the income and expenses question a little bit better. This is set 2, question 2. Now, so the question is, as given here, you probably already read it. The first question is the answers to the first question. You need to explain the theory, the accounting theory, which is supporting the accounting for expenses and income. So the accounting theory is accrual basis of accounting. By now, you already will be able to explain it. So the question is there a need to apply it? No, you don't need to apply it because in this case, right, they have just asked you to explain what it means. They haven't given you a scenario, so there's no need to apply. The second question is for you to name a stakeholder and the decision that they might make. So any of these stakeholders will do. And if you were to refer to the notes, you will be able to get the decision that they might make. So for example, lenders will want to know whether or not they should lend MYE Trading money. Suppliers will want to know whether or not, suppliers will want to know whether or not MYE Trading is able to return, pay them back on because they sell to them on credit. In the second question, you were asked to prepare journal entries to account for the advertising and the rent for the year ended 31st of October. Okay, so you do have to take note that this is a year ended 31st October. They also want you to prepare the closing entries. Now, they don't need the narrations, but I thought I'll just write there to help us understand it a little bit better. So let's start with advertising first. All right, so firstly, if you read the transaction, you will realize this is the first transaction for advertising, that $7,800 was paid by check. So if $7,800 was paid by check, we will have to record the advertising expense first. All right, and advertising expense, accounting rule is plus minus. When you pay for advertising expense, you increase the advertising expense. So you debit advertising expense. The other account, because you paid by check, the other account is actually cash at bank, and you have lesser money in your bank account, so you will credit cash at bank. So this is still quite straightforward. 1 mark will be given for this. Next, you continue to read. When you continue to read, you see here an amount of $600 paid for advertising is still, not paid. Amount of $600 for advertising is still outstanding. Still outstanding means what? Still outstanding means used already but unpaid. Unpaid owing to the creditor. All right, it means used already but is unpaid, is still owing and to the creditor. So if it's still owing to the creditor, what you will need to do is that you will need to record advertising expense payable has actually increased. All right, advertising expense payable has increased. Why is it accounting rule minus plus? Because it's payable. You owe somebody, is a liability. So that's why advertising expense payable increased, credit $600. The other account affected is advertising expense. So why is it advertising expense? Because you have already used the advertising. You have used the advertising, and since you haven't paid it yet, you are going to debit. That's why you see a advertising expense debit $600 here. All right. All right, so finally, you have to prepare the closing entry. So how do we prepare the closing entry? Remember, when we prepare the closing entry, we are going to look at the expense or the income that we are interested in, all the debits and all the credits. So in this case, the debits, the advertising expense, I'm going to just highlight it in yellow. So this is the first advertising expense here. It's a debit of 7800. There is another one over here. It's another debit of $600. All right. So in that case, the total amount of advertising expense that will be transferred to the income summary is going to be $7,800 plus $600. All right, and that will give you 8,400. Now, what's going to happen is that advertising expense, you are going to record it as a minus. Why? Because you take out of advertising expense. All right, you take out of advertising expense and you transfer it to the income summary. And that's why you are recording this as a credit rather than a debit, which is more normal. All right. Now, so you take out from the advertising expense, you credit advertising expense, and you transfer it to the income summary, and that's why you debit income summary. So we are done for advertising. Okay. What we are going to do now is that we are going to look at the rental income. How do we record the rental income? So when you take a look at the rental income, we see here that on August 28, all right, on August 28, we receive a check of $10,800 for rent. So we will need to record this rent income, and we will record it by taking rent income. Accounting rule is minus plus, and you are going to record it as a plus. Rent income increase, credit 10,800. And then you will record cash at bank, debit. Why? You receive money for rental income. I think this is still quite straightforward. All right, the other account affected. All right, let's take a look at the other account affected. All right, the other account affected is your rent income. Okay, let's see. There's this piece of information over here that tells us the rent income was for the rent income received, whatever money that you receive here. So this 10,800 that you receive, all right? The 10,800 that you receive here is actually for this period. It's for the period 1st of January to 31st of December. But you do need to take note that the year ended is actually 31st of October. All right, that means that you have actually received rental income in advance. What does it mean by receiving rental income in advance? When you receive rental income in advance, what happens is that you have received some money. You have taken the money from your customer, but the November and December has not occurred yet, right? But the income has not been earned. Or another way to look at it is that the work has not been done. Why is the work not yet been done? The work is not yet done because November and December has not happened yet. You have to take note that the year end is 31st of October. Now, if November and December has not happened yet, how many months is this? This is actually 2 months. 2 months, November, December, have not happened yet. All right? And since this November, December have not happened yet, this November and December is actually rental income received in advance. So how should I calculate this, or how should I work on this, right? So what I need to do is I need to remember that 12 months, or rather January to December is actually 12 months. And this 12 months is actually 10,800. Well, if that 12 months is 10,800, then November to December, which is 2 months, how much would that be? I need to take 10,800 divide by 12 times 2 months. All right, and this amount here, 10,000 divided by 12 times 2 months, is actually my rental income received in advance. So this is how I will record it. I will record over here, rental income received in advance, 10,800 divide 10,800 divided by 12 times 2. And rental income received in advance, is it an asset or a liability? It's a liability. All right, it's a liability because you owe your customers money. And because it's a liability, the accounting rule is minus plus, and you are going to increase your rental income. All right. The other account affected will be rent income, and rent income is going to be reduced, minus. Why minus? Because you haven't done the work, so you cannot record that income. That's why minus rent income. Pause anytime you feel like you need to. Finally, you are going to transfer the amount to your income summary. So exactly the same thing happens. What you need to do is that you need to look at all the rental income that you have recorded so far. All right. And then after that, you need to transfer that amount away. So 10,800 credit minus away 1,800 debit, right? And that would give you 900. What you're going to do is that you are going to record it as a minus. Why minus? Because you are taking out of your rental income and transferring it into your income summary. All right, so that's it for now. And then after that, they ask you to prepare a statement of financial performance. By now, you know that statement of financial performance has all the income and expense. So what is it that should really go into your statement of financial performance? All the income summary. All right, all your income summary will need to go into your statement of financial performance. So firstly, your advertising income, advertising expense, this income summary, 8,004. That's why you have this 8,004 over here. And your income summary for rent expense, 9,000, and that's why you have this rent income over here. Last piece of information you will need to prepare an extract of the financial position. So what is the statement? What is the financial position? Actually, all of them are liabilities. You take a look here. You have your advertising expense payable, 600. Payable, we say you owe somebody the money, so that's why it's a liability. And you have a rental income received in advance. You took the money from other people, haven't do the work yet, so you owe that person the work. And that's why you have the liability here. I hope this has helped you to understand the topic a little bit better. Even 5% better will be good. All right, so do watch any part of that video again if you need some further explanation, or join in any of the consultations. See you later.